Why did you get denied? People have recently been getting denied for mortgages and they don't know why. We want to talk today real quickly about what the most common reasons are that we see as to why people get denied. What's the first one?
Well, the mortgage company never really even pulled your credit.
A lot of times, guys, they don't even pull your credit.
They give you a pre-approval and basically you never qualified to begin with.
Can't tell you, and you've probably seen this too, how many realtors will call us and the first question they'll ask is, are these people actually approved and did you even pull their credit? That's sad. I mean, you've been doing this how long? Did you ever offer pre-approvals without at least pulling the credit?
No, I have a guy called last weekend, said he looked up our name and he called me and he says, I want to get pre-approved to buy a house. I said, great. I said, can I pull your credit? He said, no. I said, then I can't give you a pre-approval.
Guys, the pre-approval is so important. If you don't have credit pulled, you can't give it. And if you don't pull the credit, we can't tell you whether or not you would or would not qualify because of the next thing, the debt-to-income ratio.
Also, getting back to that, don't be afraid. You called us. I didn't call you to ask to pull your credit. You called us.
Right.
Think about that.
And the thing is this, guys, as we always talk about, the credit scale goes from 300 to 850. That's 550 points. A typical credit inquiry is going to cost you 5 points. That's less than 1% of the overall scale. It's not going to hurt you. Even if you get it pulled once or twice for a mortgage, that's not going to hurt you. It's going to hurt you if you apply for a credit card and get denied, and apply for another card and get denied, and apply for another card and get denied, and then apply for a mortgage.
Or if you apply for a car, because car dealers notoriously pull it at 20 different things. They go to 20 different lenders to see who they can get the best deal with.
Yeah.
So that means it's pulled 20 times.
Yeah. So the credit's the most important thing. You do have to have your credit pulled, but make sure that if they do deny you for credit, understand why. If it's denied for credit alone. If they pulled your credit and your credit scores are fine, which you'll know, assuming there's no disputes or anything like that, or any collections or charge-offs, anything on there that's hiding, the most likely reason next would be your debt-to-income ratio. What that means is they're looking to see what expenses do you have that are reporting to the credit bureaus. What are the most common expenses that we see?
Car payments, student loans.
Car payments, student loans are the biggest ones. What else?
Child support.
There's a lot of those.
And credit cards.
Guys, it's really important to understand when you go to get your credit pulled for a mortgage, or when you're going to apply or try to get approved for a mortgage, what you want to look at is go to Credit Karma, go to some sort of credit monitoring app and look and say, what type of accounts do I have and what monthly payments are showing up on my monthly debt list, okay? Like he said, you're going to see car payments, you're going to see credit card payments, you're going to see child support, you're going to see student loans, personal loans, anything that reports to the credit bureaus. That's what you want to understand. What is the debt to income ratio looking like? The last thing you want to look at is it could be a lack of assets. When you go to buy a house, there's a lot of people, they'll go to buy a house. They have great credit, they have great income, but they don't have enough money saved. And that can really hurt you. But what's a good source of alternative assets that people could use outside of money in their savings account that people don't think about?
Their 203K, 401, whatever it's called, deferred comp. If you work for the city of Philadelphia, a relative is going to give you a gift.
Yeah, there's a lot of different things. There's a lot of times people don't qualify because they may only have $4,000 or $5,000 in the bank, but they don't even think about the 401k. They don't even think about the 203B.
IRS refund.
IRS refund. There's a lot of things, a lot of ways that that can help as well. Guys, these are all different little things that you want to think about. That if you've been denied, maybe your lender simply wasn't asking you enough questions.
You shouldn't be denied. You shouldn't be denied during the process unless you really, I hate to say the word, lied.
Right. Either you.
I mean, there's no reason to be denied. If you're already in and you have an agreement of sale, you shouldn't be denied.
Yeah. So it's important, guys. If you've recently been denied for a mortgage, give us a call. Let us know why. Send us a message. Send us a private message. Doesn't have to be a message on Facebook for everybody to see. Send us a message or give us a call and let us know what happened.
We might be able to tell you in 5 minutes. We might not even have to pull your credit.
Yeah, guys, and realize this, and we stress this every time. We're going to ask you ample amount of questions so that we don't have to pull your credit out of the gate. Most times you're going to tell us whether or not you would or would not qualify simply from the soft fact finder, which is just our personal questions that we ask to see if you would qualify. It's going to be simple things like, what do you think your credit looks like? How much money do you make on a monthly basis? What do you have as far as any kind of secondary or other incomes that you might have that could help towards your savings? How much money do you have saved in your savings and checking? Do you have other types of savings accounts, retirement accounts, 401ks? These are all the types of questions we're going to ask before we ever get to the credit pulling situation. But I guarantee you, once we do say, hey, are you ready to pull your credit, you should be approved. And that's
Yeah, we don't usually pull credit just to pull it. After you answer the questions and you answer what we want to hear, then we pull. We don't want to waste a credit. We don't want to waste the credit. We're going to tell you how to fix it, but we're not going to pull the credit if you're not ready.
First off, it costs you points and it costs us money.
Right.
So we don't want to do that, okay? So we want to make sure that we've done our due diligence in you first. And the good part is this, guys. If we ask you the questions and we find out you're not approved today, that doesn't mean we're going to kick you to the curb. It doesn't mean we're going to hang up on you and never call you again. We're simply going to say, hey, here's your list of things to do. Now, some people, they have a long list of things to do.
Some people
and
have a little
some
list.
people have a little list of things to do. The point is, a simple conversation will help us determine that. And that's one of the other things that we pride ourselves on is we will take that extra little bit of time to truly get to understand you and your situation. So give us a call, send us a message, let us know what's happened, whether you've been denied or you're afraid of being denied, give us a call. Let us talk to you because you're not going to actually be denied. We're just going to tell you, hey, this is what you need to do so that you can get approved. All right? Hope you guys have an awesome day. We'll catch up with you later.
Stay safe.